Hello and welcome to the Trading Zone. I'm Joe Teague, portfolio manager here at Equity Armor Investments. And with me, of course, is Brian Stutland, also portfolio manager at Equity Armor Investments. Brian, how are you doing?
Good. I thought I'd wear my World Series sweatshirt from 9 years ago. This weekend reminded me it was almost a replay of that, except for the fact that the Blue Jays couldn't finish it off and come back in extra innings, unlike my Cubbies did in 2016. So I figure I'd wear that to honor it. Well, man, what a heck of a World Series that was. So fun to watch and see that
That's been
play.
a long time. It was incredible.
Yeah. So that was a fun one, but now we're back in business. We're jumping back in the markets here, Joe. What are you seeing this week?
Yeah, well, let's jump into it. You know us, we love talking volatility as former VIX market makers. Let's take a look at what the VIX is doing to kick off the week. We're getting a little bit of a lively action here. Volatility had maybe a modest shakeup midweek last week. Of course, the Fed coming out talking about, obviously they cut interest rates. They're talking about ending quantitative tightening. Markets still kind of shook up a little because the Fed was maybe hawkish on the number of rate cuts we have going forward. That said, the market's still pricing in some rate cuts as we stand here today. And maybe that's the right balance for the Fed to take. Do one thing, say another thing. They were very dovish on their actions. The end of the tightening is a lot of liquidity adding to the marketplace. So that's really good. And not surprisingly, of course, we see that liquidity being put into the marketplace. Brian, we have the MOVE Index again falling. This is the volatility on bonds, the VIX of the bonds, if you will. And this is really good for stocks. Lower volatility in bonds means more liquidity in the market. It means stocks can go higher.
Yeah, it's really interesting that liquidity is just flush back in. The Fed did say they're going to end their quantitative tightening, which was an interesting signal because maybe, and then we saw gold kind of back off, and maybe it's a signal that, inflation is not as a concern, and that, there needs to be some liquidity in the system. It's interesting. They're going to back off quantitative tightening when the MOVE Index is as low as it is. But we're seeing that the SOFR rate, that's the basically commercial paper where the interest rates trades above or equal in line with the Fed funds rate. We saw that gap widen over the last few weeks. And so maybe this is where the Fed is saying, wait, if this gap is widening, if commercial lending is not as prevalent, even though bonds as a whole, the pricing is sort of normalized and static, maybe we need to back off our quantitative tightening. So we are seeing that. But yeah, when you look at the MOVE Index here, certainly trading this low means I think stock valuations can go higher.
Yeah, and that tightening is a sign of a cash shortage. Adding or end of the tightening will free up some money into the system. Yeah, I think that's the bigger story than the Fed cutting. The Fed may be throwing some cold water on future cuts. I think the end of the QT is the bigger story for me. Skew having a little bit of a more subdued reaction than the VIX. The VIX kind of a sharper bounce back last Friday. The skew is kind of wishy-washy, still really low here on the skew. Maybe kind of a sign that the skew is comfortable here, and the rally definitely can continue. For me, though, it's still a sign of volatility is on the lower end of the range. Still could have a big pop to the upside if it doesn't go. The market doesn't go the way that investors think it will.
Yeah, I still think you need to take note on the skew. The fact that it's down this low hasn't really come off the lows that much as the VIX has. Maybe an indicator that traders are willing to sell some puts on the downside. We got reports, Berkshire Hathaway earnings this last weekend. The cash pile continues for them. One thing that doesn't indicate about their cash pile is, are they selling puts against the cash pile in the market? That we don't know, and that I believe they probably are. And that's probably why the skew indexes remain somewhat low. They're obviously a big player in that short put insurance part of the market. When you buy a put, you're buying insurance on the downside of the market. So when you're selling it, you're willing to accept that you have to buy the market no matter how low it goes. And that's a way sort of for them to enhance yield on their cash. And I wonder if they're doing that. Obviously, that's speculative on my part, but that's where we see it. And that's where maybe the skew index gets pushed lower because they're selling those puts and traders are taking the value of those puts down as they buy.
I would assume that's the case. Of course, we know Warren Buffett is a big fan of selling insurance. So it makes sense to me that is exactly the case. I definitely speculated about that on our blog. If you didn't read that this morning, make sure to check it out at equityarmorinvestments.com. Check out the Ripple Effect blog. Make sure to subscribe for updates as well. Really good insights you'll see about volatility and market action. Get it ahead of get it when the news comes. And anyways, here is the VIX futures skew. The red line here, Brian, on top. The current curve is higher than it's been lately, and that makes sense. Of course, we're coming into the fourth quarter. The fourth quarter, a more volatile part of the year than in the summer months, obviously. So it makes sense that we are increasing in volatility. And I just want to say, we're kind of gearing up the end of this VIX talk here, Brian. When we're looking at the rest of the market, we're just kind of in a cycle here, and there's a lot of fear out there that people are talking about it. But yeah, I don't know if you took your kids out trick or treating, Brian. Did you and Xander go out trick or treating at all, or is he too big for that? Goes with his friends.
No, I think we're heading on the last maybe year of me taking him out, maybe one more after that. So it was kind of fun to experience that, soak that up. And by the way, trick or treating for my kids as boys, they like just running to houses to pack up as much candy as possible. So it's not a trick or treat walk; it's more of a run pace.
That was Abby. She was just like, and she didn't do it very efficiently either. I would have figured like going house to house would have been more efficient, but she zigzagged across the street each time. And I couldn't really corral her to try to get her to go a more efficient route. But she got her calories in, and she burned them through.
Yeah. I did too, actually. So I think I lost a couple pounds on making that.
Oh, wonderful.
It was good.
That's good to hear. But anyways, it's fun to have the little spook, the little scare for Halloween. I think it's a fun part of childhood, but I think it's something that our brains just kind of hardwire into us, that we gravitate towards spooky things and scary things. And as adults, it's no different, Brian. Like, we read scary news, like we like scary movies. It just seems to me like if there's a headline that bleeds, it's more likely to sell more. And that's just the case, of course. We all know this with stocks. And even though, we're in this beautiful, wonderful rally here, it just feels like scary. It feels like we're in a bubble. And maybe we are in a bubble. I can't really tell you for sure. It seems like we're in a bubble. But if we're in a bubble, there could be a few years of outstanding returns in the bubble. So maybe the bubble is going to turn around tomorrow, and then we're going to lose it all. Anybody's guess, but I'm leaning on the side that we are in the very early stages of the bubble, and we're going to watch this thing inflate over the next coming 2 or 3 years here, which just coincides with this chart.
So mark there and get to the high in like June of 98. So even until like the first really emergency rate cut, what does that look like? Is that like 100% return on the market during that time frame?
Yeah, I mean, a hair under 1,500, and where we are here, given this area, let's just call it 750. So yeah, you can call it 100% return.
Oh man! So you stay in the market, you double your money. But along the line, there's 1, 2, 3 little 4, and then there'll be a major carpet shakeout where you need an emergency rate cut. So it's not going to be an easy double your money along the way, but one where I would want to kind of stay in it. But valuations are crazy high, aren't they, Joe?
They're crazy high, but they're still climbing. Now, I saw OpenAI is looking at potential public offering valuations. They're a company that doesn't make a ton of revenue. I'm not really sure where it's at, but I think it's like it's not double-digit billions for sure. I'm not even sure it's $1 billion in revenue, but they're a company that is going to be valued at right now $1 trillion, over $1 trillion if it went public. So that's kind of where the bubble narrative starts to play out. But that hasn't happened yet, Brian. It's not public yet. It's not going to be public maybe until the second half or fourth quarter of next year, or maybe even it's a 2027 story. And then you go alongside OpenAI and see who else is going to be going public with it. This is still a very early part of the story. And if you go back to the .com era, you really started to see it spread out with the public offerings in the very late 90s. You really started to see this bubble out in the late 90s. Yes. So far, a lot of the spending before OpenAI has been the Microsofts, the Googles, the Amazons of the world, companies that are very rich in cash. They're spending money, they're earning money, they're earning money faster than they can spend it. It's not really a debt problem. Now we're getting into some OpenAI money that's being spent, and it's coming on leverage. Really, they get a check from NVIDIA buying some of their company that values them at $500 billion. They take that $500 billion, they get a loan, they write a check to Oracle. Oracle turns around and buys some NVIDIA computers. So it's really we're starting to see the early stages of that. But for me, this is very, very early. It's not, these projects haven't even been built yet. So we're just looking at this thing start to filter out through the system.
Well, this is one thing about the valuation side of it. When you think about it, though, like an OpenAI and everything of the ecosystem around it, the cloud, the data, everything, the chips going in there. What's really happening is they are building a brain to a robot, and who cares what they earn, really? When I think about it, it's a matter of what are people going to pay to own a brain, right? They're literally building out critical thinking. Data analysis, all of that. It's the next leg. And by the way, if you stick around, we're coming up shortly here. We have our trading zone trade. And Joe, I love the trade you came this week. I think it's actually a very interesting play because I think this is really the next leg is let's take the brain, let's put it into place. And now let's try and figure out how to make money with the brain, right? And so what are you willing to pay to own sort of the central nervous system to the architecture that's going to be needed to sort of do things with that. And that will be the next leg. I think it's that next one on valuations where you have to look forward on some of these other companies in the concrete and how some of the efficiency in our world economy is going to play out when we have a sophisticated central nervous system analyzing and employing this stuff. So valuations could mean nothing, as strange as that sounds. And so it can go higher.
It does matter. It does matter, though, when you have debt and you have to repay that debt. You have to earn money back to finance that. So there is a bit of a risk there when you're financing your projects on debt and you're not paying that off. So that absolutely is a risk to me.
That is a risk, and that's probably why the VIX, a floor of 15 or 16, like we talked about volatility before, it seems to be holding steady there. It's why the skew index, when we talk about that and the level of put buyers in the market start to come in at some point when it's too low, because there is risk. There is debt risk continuing to build in the economy right now, whether you think valuations are appropriate or not. So I'd rather not turn the story about valuations, but about debt risk. I think that's what it's always about. And so can this continue? Yes. But do you worry about the debt level payoff? Yes, you worry about that too.
Yeah, but I love the infrastructure build out, getting us ready for this next wave. But if you go back to the .com parallel, like we had this huge infrastructure build out, right? We got ready for the .com. We had this huge blow off top, and it kind of took 5 years for it to really materialize. And it was great that we built that. It was great that these companies sacrificed themselves so that we could live. It was great that we have, sacrificing of, the Netscape so that Apple could build their mega phone and just turn the world into what we are today. So just need to keep that in mind. We could get to this pinnacle and then have a blow off top, and then AI will turn on and we'll really figure out what's profitable, what's not. What are these great tools we can use with it?
Do you know any portfolio managers that manage long stocks and long volatility in case this happens?
It's a great question. Make sure to check out equityarmorinvestments.com. Take a look at all of our offerings. Yes, as former VIX market makers, having firsthand knowledge of how the VIX reacts, having firsthand knowledge of of how the stock market reacts. You know, I've been in love, same with you, with investing my whole life, just watching the stock market. I am just a firm believer in America and capitalism, and give the market a long enough period of time, it's going to be higher. I also know that while it's going higher, there's going to be extreme periods of volatility. People don't get the VIX. It's an asset class, but it's not like stocks. It's not like bonds. You can just buy and hold, forget. It's something that needs to be managed actively. It's something you need to say, hey, it's cheap today, I should own more, or it's expensive today, I should sell it out and buy some more stocks, because great news, when volatility is high, stocks are on sale.
Yeah. Well, before we get to our trading zone trade, which, by the way, you can subscribe. Joe mentioned equityarmorinvestments.com. Go there, check it out. You can get these trades dropped right into your mailbox, updated as we change and go about. You can even contact Equity Armor if you want somebody to manage that position for you. But before we get to that, Joe, anything in the charts that you see interesting this week?
Sure. Yeah, just real quick, want to run down some of the major indexes. S&P 500 hit an all-time high, had some great earnings. Google, I think my favorite company right now, just leading the charge, saying, hey, we should have a higher valuation. We're past some of the regulatory risk. They proved that search is still profitable. They're using AI to get people to search more, if you can believe it. Also kind of using AI to have more profitable, more targeted and direct advertising. So they're leading the way in kind of profitability of AI. It's not in people paying for talking to a chatbot assistant. It's going to using the AI tool to make their business more profitable. I think that's going to be a catalyst for other companies to do the same. The NASDAQ, no surprise, same, just a little bit more volatile here. Semiconductors, NVIDIA leading the way. You know, all of these big companies that are reporting earnings, they're not slowing down their capital expenditures, Brian. They're increasing it. They're doubling down. They're tripling down. They're seeing the future. It is AI. They're going to need chips. They're going to need data centers. In about 2 minutes, we're going to have our trade of the week. It's going to be related to that. Believe me. Diving deeper, we have the Mag 7 index. This is, I think it's hitting an all-time high, very close to it right now. Just fantastic performance. Amazon, big winner today. Just more good news for Amazon as their cloud performance was better than expected. I think that's really important right now. If people are building data centers, that we're going to need to see some profitability in these data centers. So great news for the market that Amazon's cloud business was a nice beat.
Yeah, definitely.
So anyways, let's get to it. Palantir is going to be reporting earnings, and I think we've been talking Palantir for 2 years here now, Brian, how much we love this company. It's been a great addition for us, for our clients, but it's just been something we've just have not wanted to trade, just kind of held it as we've watched it have this meteoric rise here. We've very, very briefly, I think it was in here, one of their earnings, we took a very quick protective put short where we bought a put and closed it out right after that on one of their earnings. I'm just in love with this growth. I see no reason to step in the way here. Just kind of watching it play out. And I'm thinking, looking at Google's earnings, looking at Amazon's earnings, this is the next wave of AI. It's not in a chat bot that can, make you feel good. It's not in, a video creation device. It's in using big data to make fast decisions that people can't do. And that's exactly what Palantir can do. That's what they can offer for governments and for companies alike. I think they're just going to continue to be growing along that method, and it's not going to end anytime soon. And I think, Brian, you and I have talked that it's going to take consultants. It's going to take people talking to companies, talking to individuals, saying, what are your specific needs? How can we utilize these tools, put them in place faster for you to take advantage of what AI is offering? And Palantir just is that company in a nutshell.
Yeah, this is the next leg I was talking about is taking sort of the central nervous system, the brain, and then now putting that into place for businesses to utilize and figure out what makes them efficient. because there's so many, like the last 2% mile of building something out really takes somebody understanding the nuances of that business, and then putting the agents on top of that to learn about that nuance and then employ it. It's kind of hard to sort of figure out of nowhere unless you're in the business. And so this will be sort of the next leg up. Obviously, Google, man, that stock is just ripping. If you look at, I don't know, this first leg was a 6-month run higher from, call it 170 to 240. So you're looking at about a 50% return. Maybe the next leg is like the next 4 months with a 30 or 40% return. So, it's well on its way for that next run.
Yeah. So bottom line is this is a company that, was around, by the way, in the .com era, was one of the peakers.
I traded. In fact, as a specialist unit, that was actually the number one pit in the CBOE was Cisco and Oracle were in the same trading pit, options on those. We made markets in those. We were the lead market maker in there. I remember that very clearly. And so this is interesting that this stock is sort of experiencing a breakout. You got a trade on this, Joe?
Oh, 100%. And it's same with Oracle. It's kind of having a second life here, but Cisco has been kind of like the roads, a connectivity of the data center build out. Of course, NVIDIA, maybe the brain or heart. I'm not sure which one metaphor you want to think. Probably the brain is going to be. But connecting it all together and having it secured has been Cisco, and they are the networking powerhouse. They have a moat, and they have also kind of solidified that moat by buying a company a lot of people thought was extremely overpaying, buying a company called Splunk. They paid $28 billion for it last year, which was about, back when Palantir was valued around $40 billion. They bought a company, Splunk, and Palantir has had this phenomenal growth. Now we're maybe $300-400 billion. I'm not even sure, we're at maybe $500 billion right now in Palantir. And they offer a similar data analytics company. It's going to be a networking, analytic, cybersecurity version of it, but that is something that people will need as these data centers build out for sure. So as these data centers build out, they have the software that goes into their networking, which people are not going to be able to live without. It's kind of the same way that NVIDIA has the software that goes into their AI chips, which are just miles ahead of their competition. So I think they have this moat. We know the data center build out is coming. It's not going to happen without Cisco.
Yeah. I do like the stock. I think it's something that maybe Joe and we've been kind of like tooling over whether we add this to our portfolio of names that we buy for clients, just as an outright stock buy. If I was an option trader, I think there's an option trade to be had here if you don't want to buy the stock. But this is something we're probably consider adding. We had a huge winner in our portfolio on Electronic Arts, that company being bought out. And so we need to deploy some new capital. This is maybe one area to sort of put that over. Making a new all-time high, kind of touching, retesting the all-time high, but prior to that and then going, pretty encouraging for the stock, I think.
Yeah, 100%. I view this as a critical support line. I don't think I'd want to own it below here. So that's kind of where I am designing this trade. It's just simply a long call, Brian. Yeah, I'm just saying, hey, I want in. Maybe if we get a good Palantir result, we're going to get some sympathy here higher on this trade. They have earnings coming up next week, Brian. So maybe something I can look to sell a call if there's a run up over the next week before they have their earnings. It allows me access to the name. I'm going to buy the December 19th expiration here, 72.5 strike call, pay $4.25 for that call. It's already, $75+ here. So I'm already right around $75. So I'm already, it's already worth about $2.50 as we trade higher. I'm, risking, of course, $4.25 if we trade down, but that's all I'm risking. Owning the stock, of course, it could trade much lower.
Yeah, just explaining option trading. There's intrinsic value and extrinsic. intrinsic is the difference between the current stock price and the strike price, right? That's where you would have, that's a differential that you'd have to sort of pay as you sort of buy the stock and have the right to own the stock. The extrinsic value is the added premium that people adjust for volatility and time to expiration and earnings and dividend and interest. So that extrinsic value is only about 2% of the value of the stock. That's pretty cheap to me, when we still have an earnings play in that to go higher. So I love this as a way to, like, this is maybe a way to sort of get in the stock. If it rips higher, you're in with the call. If it rips lower and retests, let's say goes back down to previous all-time high, gets down to $70, you're out. You only risk the premium value of the call option. So I do like this trade as a simple just way to initiate a position into Cisco.
Absolutely. Just kind of biding my time here ahead of earnings. Want to get in here. The first 3 days of November are 3 of the best trading days of the year for the stock market. I know there's a lot of worries out there. People are worried about the bubble. People are worried about the Hindenburg omen and everything else there is to worry about. But I'm just going to ride it higher. No, if it goes to the downside, I'm protected. I'm fine with that. But I'm just looking for more upside here.
All right, well, it's been a great show. Make sure you tune in every Monday, noon Eastern. Have your lunch, listen to our trades, subscribe to our Trading Zone. Get these trades delivered right to your inbox as we make changes. We're here every week talking volatility, talking the nuances of the market, and, of course, giving our trade idea of the week. This is Brian Stutland here at Equity Armor Investments with my colleague Joe Teague. We'll catch you next week, noon. Tune in every Monday. Catch you then.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.